Welcome to another episode of Balancing Acts, your guide to grow, profit, and scale. I'm Linda Hamilton, a CPA, a certified exit planning advisor, and a systemologist. Today, we're going to talk about financial clarity. For the past 30 years, I've been looking under the hoods of businesses to uncover what truly drives success. The numbers do matter, but the story behind your numbers uncovers hidden threats and hidden opportunities. And one thing I've seen over and over again is that success isn't just about working harder. It's about striking the right balance. It's about having the right strategies in place. It's about taking action. And today we're going to talk about this with my guest, Felipe Wityk Sanchez. But before I introduce Felipe and financial clarity, let me introduce the concept of drift. Imagine two futures for your business. One is a green line trending upwards, and the other is a red line that curves downwards. The green line is a function of taking action, of making decisions, of keeping yourself on the path to success. The red line is a function of drift. We run our businesses, we're excited about it, everything's going well, we're selling, and we find over time that we drift. Maybe profits aren't as good as they should be. Little cash flow chaos. Your customers aren't paying you fast enough. You can't pay your vendors fast enough. Hiring, all these things that can impact your profitability. And we drift towards that, partly out of complacency, partly because we don't keep our eye on things, and sometimes through no fault of our own economic downturns. So I'm really pleased to introduce Felipe Wityk Sanchez. Felipe came to the United States when he was 9 years old from Chile. He's done bookkeeping and accounting for nonprofits and small businesses, and he founded Wellspring Financial Services 10 years ago. They provide small business financial services, accounting, bookkeeping, payroll, advisory, business formation. And his goal is to help Hispanics in the U.S. grow their businesses by empowering them through financial knowledge to build a profitable, resilient business and also generational wealth. Welcome, Felipe. It's so good to have you.
Thank you very much. It's a real pleasure to be with you. Thanks for having me.
So let's talk first about demystifying tax complexity. I know we're both in the tax business, and business owners, they're terrified of the IRS. They're very confused with tax laws, and it really can get in the way of them having what I call drifting towards this red line and financial confusion. Tell us about how you help business owners move towards clarity.
So a lot of times it starts with forming an entity. And what are they trying to accomplish? And where are they in the process of creating a business? And what is their long-term strategy? A lot of businesses start off with, they want to be an S Corp or a corporation. And that's not practical necessarily because there's a lot of administrative responsibilities, a need for payroll if you're a corporation, a need for minutes when you get together, a need for quarterly taxes, etc. And it might make sense to initially be an LLC, depending on, and so those are some of the things that initially you have to have a conversation with the client. Well, what are they trying to accomplish? What is the whole scope of work required for form an entity and then yearly trying to sustain that entity. So that's very important. A lot of times that businesses don't know, what is a reasonable deduction? What is and the IRS that says it's ordinary and necessary. Is it ordinary and necessary for a painter to deduct his haircut? It isn't ordinary and necessary, but it is for an actor, for example, very active actor. So those are some of the things that we talk about with our clients, especially we deal with clients that are in the construction industry, in the hospitality industry, in the cleaning services industry. Those are by and large our type of clients. And then we have professional services, and they all have what are reasonable and necessary and ordinary necessary deductions, but specific to their type of business.
That's great. I'm glad you raised that. And so what happens if you deduct an expense that isn't ordinary and necessary? What happens in that case?
Well, it can get flagged by the IRS. I remember when I first started out, there was a person that did a lot of shows and photo shoots and was a graphic designer, really, and did a lot of photo opportunities. And he deducted a considerable amount of entertainment expenses. And he was passing really through his own entertainment expenses. He showed us all the receipts, but that got flagged by the IRS. Was it reasonable and ordinary and necessary? And it wasn't. And so it got denied. A percentage of them got denied. And it talks about the need. You know, a lot of people think, oh, I have a credit card statement, or I have a bank statement. But really, if you have to substantiate whenever, especially at the state level, we find that at the state level, they want to know, well, prove to us that you have a building and that you're depreciating that building or that business, or you have equipment and you're depreciating it, for example, or that all of your the losses are because you've expensed all these items and are claiming the losses for 2 or 3 years. So in addition to having correct bookkeeping, you need to substantiate with receipts. And a lot of times clients don't know that. You know, you have to back up what you are presenting.
Exactly. And so in some cases, it's the receipts. In the first example you talked about, the guy had receipts, but they were unreasonable, right? Unreasonably large. And so what happens then? The profit, suddenly you have a bigger profit and you owe taxes, which can set you back. That's one of those things about drifting towards that red line, because suddenly you got this giant tax bill maybe that you weren't expecting. You said something else about, which I thought was really important, about what kind of an entity. It's really important to talk to your accountant about that. So why is it easier for some owners to operate as an LLC instead of a corporation or S corporation?
Well, an LLC is a pass-through entity, meaning that you maintain your records, especially if you're a single member LLC, you're the sole owner. You're creating a Schedule C, and it's created in your own tax return. Mm-hmm. And so the maintenance of it, the upkeep of all the expenses and the income, you need to have a separate bank account and a separate credit card account. But entering and capturing all that information is so much easier than an S Corp or a C Corp, and it's also easier to form them in terms of the compliance required to form them. Now, at some point, though, when you are having gross or net profit of $50,000, $60,000, and you're paying self-employment taxes on that, it makes sense to probably consider creating an S Corp and reduce the self-employment taxes that you're paying. Now, there's also a little more maintenance on that because now you're a corporation, but there's also a lot of benefits associated with an S Corp. Yeah.
And so I'm glad you distinguish the two, because I often say you can't do everything because of taxes, right? You have to look at your own resources. Are you capable of doing the administration? Do you have professional help? So it's important to have that conversation. What's best for my business at this stage of where the business is and its growth and trajectory and its profitability. And with S corporations, there are more formalities to it,
Correct.
right? And
That is correct.
with LLCs, it's less, especially if you're a single owner, it's less strict, so to speak. You still have to worry about ordinary and necessary business expenses, no matter what form of business you're doing in. So what would you say is your tip to business owners in helping them decide, do they have the right entity right now, or can they change it? What would be your tip to those listening?
Well, absolutely ask your accountant to evaluate the entity type that you have and where do you envision it going and why. I have a lot of people that have created C corps, and I ask myself, well, are you going to have, are you going to be selling shares at some point, or are you or doing raising money, and if you're not going to be doing that, then that's a lot more complicated than a S corp.
Exactly.
And then they want to pay themselves, and they're paying themselves. These are people that don't really know, and they're paying themselves with a draw. Well, a corporation doesn't allow for that. You can get a dividend, and they don't even understand the differences.
Yes.
You could get a draw and take money out of the system or out of the business as an LLC, but not in those other entities, and how it's taxed. So
that's a really important distinction. And we're going to take a commercial break. I want you to tell people how they can find you, but stay with us because we're going to come back and talk with Felipe more about different things you can do with your taxes and with your finances. Felipe, what is your website if people want to learn more about your
Wellspring Financial Services, www.Wellspring Financial Services in New York.
Yeah. Stay with us, and we're going to come back and hopefully provide more things for you to get through this tax season and many more.